Ladies and gentlemen, good day and welcome to the Gala Precision Engineering Limited Q3 and 9M FY2026 earnings conference call hosted by Valorum Advisors. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hina Khatri from Valorum Advisors. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a warm welcome to you all. My name is Hina Khatri from Valorum Advisors. We represent the investor relations of Gala Precision Engineering Limited. On behalf of the company and Valorum Advisors, I would like to thank you all for participating in the company's earnings call for third quarter and 9 months ended of financial year 2026. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are made on management's belief as well as assumptions made by the information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and the financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Balkishan Jalan, Whole-Time Director, Mr. Satish Kotwani, Whole-Time Director, and Mr. Srinivasan Giridhar, Chief Financial Officer. Without any further delay, I request Mr. Balkishan Jalan to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Hina. Good evening, everyone, and welcome to our earnings call to discuss the performance of the third quarter and 9 months of the financial year 2026. In the interest of the people who are new to the company, let me first give a brief overview of the company. Gala Precision is a preferred manufacturer of the high precision quality component. We serve various sectors like renewable energy, industrial, and mobility. Geographically, we are diversified across sales in India, Europe, and USA. We supply to OEM, Tier 1, and channel partners. We manufacture customized products of over 750 SKU to serve almost 175 active global customers across 25 countries. Our facilities are fully equipped with advanced technology and integrated capabilities for designing, developing, and manufacturing a diverse product portfolio. To further strengthen our manufacturing footprint and expand the product range, we established a new facility in Chennai. The plant will focus on producing various high tensile fasteners, including bolts. These are mainly complementing the existing products and enhance our ability to meet customer demand. For revenue mix perspective, for the 9-month period, DSS account for approximately 48% of revenue, providing a stable base of recurring volume. SFS contributed around 35%, reflecting strong growth momentum and increasing customer adoption, while CSS represent about 17%, supported by steady demand across industrial and renewable energy applications. The SFS segment continued to be key growth driver during the period, with strong traction across customers and programs. For the 9 months, segment revenue grew 108% year-on-year, while the third quarter revenue increased 149% year-on-year, reflecting sustained demand momentum and improving capacity utilization. Our operation at the Chennai facility progressed well during the quarter, with volume scaling up across approved customer program. The plant generated approximately 11 crore of revenue in the third quarter, making steady progress in building scale at the new facility. During the period, we conclude price agreement with 4 leading wind turbine OEM for new bolt product to be manufactured at our Chennai facility, strengthening our position in the renewable energy supply chain. We also expanded into new industry segments such as equalizer and tractor implements of fasteners, while continuing scale up our Gala business, further diversifying our revenue base. The DSS segment, despite being the niche product category, delivered a strong performance with the sales growing 37% year-on-year in quarter, The growth was primarily driven by the higher export traction, with export increasing their contribution from 44% to 51% of GSS revenue. Further, we continue to take focused steps toward cost optimization and sustainability. We have initiated development of 1.8 megawatt solar power plant under the open access model for captive consumption. The project aligns with our ongoing efforts to reduce power costs and move toward the carbon neutral power consumption. A total capex for the project is estimated approximately 6.2 crore, including one-time statutory approval. We already issued purchase order to the EPC contractor and appointed technical consultant for overall project support and review. The project is expected to be completed within 6 months, subject to the necessary government approvals, and will be funded through bank borrowing. In addition, we will be migrating to SAP HANA in financial year 2027. We have finalized 5-year license agreement with SAP India and plan to commence implementation by Q1 of the financial year 27. With the targeted to go live in early quarter or Q3 of the financial 27, we have committed a 5-year subscription agreement with a total fees of 3.48 crore payable over a 5 years with the escalating annual payments. We are currently in the process of evaluating financing implementing partner. This upgrade is expected to strengthen our core system, improve operational efficiency, and enhance scalability to support the future growth. So overall, we are pleased with the strong operational momentum and steady execution of our strategic priorities around the innovations, customer diversification, and ongoing investment in facility. With that, I will now hand over to our Chief Executive Financial Officer, Mr. Girdhar, who will take you through the financial highlights for the period under review. Thank you. Yeah, Girdhar.
Good evening, everyone, and welcome to the earnings call today. Let me provide a brief overview of the financial performance for the third quarter and 9 months ended for financial year 2026. For the quarter under review, consolidated revenue from operations stood at around 85 crores, reflecting the 47% year-on-year increase. EBITDA for the quarter stood at around 15 crores, marking a 90% year-on-year increase. EBITDA margins expanded to 17.12%, improving by 387 basis points, supported by favorable exchange gains on export revenue and reduction in personal costs as a percentage of sales. Net profit stood at 8 crores, representing a 57% year-on-year growth, with PAT margins at 9.73%. For the 9 months of financial year 2026, revenue from operations stood at 220 crores, reflecting a healthy 35% year-on-year growth. EBITDA for the period stood at 35 crores, reflecting a 67% year-on-year increase. EBITDA margins were at 2.07%, declining by 110 basis points during the period. Net profit for the period stood at 23 crores, registering a 38% year-on-year increase, with PAT margins at 10.56%. During the period, profitability was impacted by certain one-time exceptional items, including a provision of approximately 9.4 million related to the notification of the new labor code, as well as the reversal of approximately 7 million of export revenues under the remission of duties and taxes on exported products scheme. With this, we can now open the floor for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Hiral from Shatrunjaya Investments Managers. Please go ahead.
Yeah, hello.
Hello? Yeah, hello. Please go ahead.
Yeah, good evening, sir. Am I clearly audible?
Yes, ma'am.
Yeah, sir, I wanted to know that in the current results, I could see that the EBITDA is expanded, but the PNL is flat. So what is the reason behind that?
The reason, madam, I mean, in this quarter, we had, there was a one-time hit on account of retirement benefits due to the new labor code, which is 94 lakhs. Apart from that, there is also a reversal of 70 lakhs of the road tax income. That also impacted the profit. So overall impact in the profitability was 1.64 crores, which is the reason the profit remained flat in this quarter compared to previous quarter.
Okay. And are you expecting that the margins will be sustainable in the further quarters and the year end?
Yes, margins will be stable around 70 to 90% in the coming quarters, also year end.
All right. All right. Thank you.
Thank you. Participants who wish to ask a question may press star and one on their touchtone telephone. The next question is from the line of Dimit Mehta, an individual investor. Please go ahead.
Good evening, sir. I have two questions. So the first question is, so the SFS reported a very strong year-on-year growth this quarter. So is this largely driven by an increased business with the existing OEMs, or is there any new customer items?
Yeah. So I think for SFS, basically it is driven by both. So with existing customer, we are adding and increasing the wallet share of products which we have been already supplying. And also we are getting new products from these existing customers. And parallelly, because of our continuous business development efforts in India and in the global market, we are adding new customers. So this is combination of all the factors combining this high growth.
Okay, sir. And the second question is, why has the finance cost increased in this quarter, and what are the current debt levels as of for the company?
Yeah, I'll answer that. Finance cost increase due to increased use of working capital facilities to move for growth in revenue in this current year. And the current debt levels is around 40.72 crores.
Okay, sir. Okay, thanks. Thanks for the opportunity.
Yeah.
Thank you. Participants who wish to ask a question may press star and one. The next question is from the line of Darshan from Internal Capital. Please go ahead.
Yeah. Hi, sir. Thank you so much for the opportunity. I just wanted to ask, when is phase 2 of the Chennai plant expansion expected to commence?
Yeah, hi. Yeah, so phase 2, as of now, we are almost at the peak of utilization of the phase 1 capacity, and phase 2, as we plan, we will be starting in Q1 of FY27, in the next quarter.
In the next quarter. Okay. Understood. And sir, could I get a general outlook? What are you expecting from the industry?
We always maintain we are seeing the revenue growth of 20 to 25% in year.
Right. Okay, so as previously maintained, right?
Yeah, we are still maintaining that.
Perfect, understood. Thank you so much, sir. Thank you.
Thank you. The next question is from the line of Stuti Agarwal from Chhattisgarh Investment Limited. Please go ahead.
Thank you for the opportunity, sir. I just wanted to ask about the reversal of the 7 million with respect to the export incentive. So could you throw some light on that, or what is it about?
Mainly that this is relating to the fastener products, in which we had inadvertently claimed export incentive of 17 lakhs. And so when we went on to the notification in depth, we came to know that this incentive, which was earlier available under MEIS scheme, has been withdrawn under the road test. And although the customs had allowed it, but later on during audit, this one got highlighted. Hence, we had to reverse the entire benefit in this quarter itself.
All right. Thank you, sir.
Thank you. Participants who wish to join the queue and ask questions may press star and one on their touchtone phone. The next question is from the line of Manasvi Sharma, an individual investor. Please go ahead.
Hi, thank you. I just had two questions. One was on the inventory days, which had increased earlier due to the Chennai ramp-up. So I just wanted to know if the inventory levels have started to normalize in Q3. Hello?
Yeah. One minute. Inventory days had increased earlier due to the Chennai ramp-up. Now it is on the reduced trend, but it will take another couple of quarters to actually stabilize.
Okay. And just another one, to what extent was the higher tax expense in Q3 influenced by one-off adjustments, or was it just a timing difference?
No. See, as we got the ESOP tax benefit in quarter one and quarter two, which were lagged, not that quickly. Hence, the tax provisions are higher. Secondly, the provision of 94 lakhs on account of the new labor code was also deferred, which resulted in higher tax.
Okay. All right. That's all from me. Thank you.
Thank you. Participants who wish to ask a question may press star and one on their touchtone telephone. The next question is from the line of Ajit Sethi from Eco Quantum Solutions. Please go ahead.
Thank you for the opportunity. Sir, margins expanded from 15.5% to 17% around. So what was the reason for this margin expansion? And going forward, can we expect similar margin? Is the margin sustainable going forward?
EBITDA margins including on after division Y basis, the contribution of exchange gain in export revenue and reduction in personnel cost as a percentage of sales. And because of this, this resulted in the cost percentage reducing by almost 2%, and also the personnel cost also reduced by 2%. And that is the reason the margins expanded in the quarter. Yes, the margins we will be able to sustain between 17 to 19% going ahead.
Okay, sir. Thank you.
Thank you. Participants who wish to ask a question may press star and one on their touchtone telephone. The next question is a follow-up question from Darshan from Internal Capital. Please go ahead.
Yeah. Hi, sir. So I know you talked about the 20% and you want to maintain that, but I just wanted to understand, with the current reduction of tariffs, do you anticipate any impact on demand or a ramp up in the order book as such? I know that you want to be like conservative with the 20%, but maybe a little more.
So to be very specific, I think this year we are targeting to grow around 28%, and next year onwards again we are still targeting to grow 20 to 25%. As far as the tariff is concerned, I think for US reciprocal tariffs reduced from 25 to 18%, and Russian oil sanction, which is likely to get removed, which was 25%. But the point is the products what Gala is manufacturing are springs and fasteners, which fall under Section 232 of the US trade law. And in this section, there is no relief given as of now. So currently, these products which fall under Section 232, if they are imported in US, we have to pay, or customer has to pay actually 50% tariff, which is applicable on India and also if you import from Europe except UK. So from US tariff point of view, we don't have any major relief. But in case there is substantial reduction in Section 232 tariff, then we might see some improvement from the demand.
Okay. Yeah, that helps a lot. So I know now what to track exactly. So that helps. And one more question I had on what is the current status of validation and commercialization of seat retractor springs?
Yeah, seat retractor spring, basically we have completed the testing and validation at the customer end. And after that, we also supplied them small lots, which they have again tested, considering this is a very critical product. And now we are expecting pilot orders from customers in this quarter. And slowly we may start ramp up month on month in quarter one, quarter two after supplying this pilot lot, which is expected to be supplied in this quarter end or early next quarter.
Right. Okay, perfect. Thank you so much, sir.
Thank you.
Thank you. Participants who wish to ask a question may press star and one on the touchtone telephone. The next question is from the line of Krupa, an individual investor. Please go ahead.
Hello.
Yes,
Yes.
Hello. Yeah. Could you actually please share put some light on the solar project?
Hello.
Yeah, Giri.
Yeah. Solar, basically, we have, appointed a EPC contractor for, installation of 1.8 megawatt solar project under the CapEx model for captive consumption. And basically, this will help us in reducing our power cost, and also, in line with the achieving carbon neutral in the power. And it is around 6 to 7 months for the project to be completed.
Okay. Thank you, sir. But since you mentioned that you'll be lowering the cost, so what could be the over and above benefits that we could have from that?
Overall, benefits on the power cost will be reduction of around, on an annual basis, 20%, 15% benefit.
Okay. Thank you, sir. Just one last question from my front that with the whole wind renewable energy market, since we are expecting to see like a good increase in number of installations and also the demand from the OEMs is also rising. So how do you see the company positioned in the whole, in this space?
So I think currently we are very well positioned. Basically, we started with all the wind OEMs with studs, which we were manufacturing and continue to manufacturing in Vara plant. And most of these OEM also need bolts, which are high tensile critical fasteners. And with Chennai facility, we invested in the forging, and with the same OEMs now we are also started getting price agreement, pilot lot supplies for bolts. So I think our basket is increasing in terms of product offering for wind industry, and this is one of the reasons we are seeing good growth coming in the fastener business in 9 months, and particularly in quarter 3, when we started delivering also from our Chennai facility. So we are positive to continue this growth momentum in wind industry and ride on this growth which is targeted by the OEM.
Okay, got it, sir. Thank you so much.
Thank you. Participants who wish to ask a question may press star and one. The next question is from the line of Vishal Maru, an individual investor. Please go ahead.
Hi. Congratulations on good set of numbers. We're just curious in terms of how important is it for the company to invest in key research and development R&D areas to stay ahead in precision materials manufacturing processes over the next few years, and how's the company looking at some of this? Thank you.
Hi. Mr. Maru, is a good question. So basically, there is a scope for research and development, but in Gala, basically, we are focusing more on the development side, where we focus on the market development, focus on the new product development, focus on the product improvement, process improvement side, because globally, these are the things which are very easily acceptable in OEM if we are doing something from the India. And historically also, we focus and incurred cost in the new product development, and we are continuing to do that in future as well.
Okay. Thank you. Thanks for the explanation.
Thank you. Participants who wish to ask a question may press star and one. The next question is from the line of Marich, an individual investor.
Hello.
Yes, sir, you're audible.
Good
Please go
afternoon,
ahead.
sir. Could you please share some details on the new project which is currently in the focus and how the company identifies and finalizes the new products which are under currently development? So please could you share some light on this?
So I think basically we are a customer-driven organization, and basically, as I mentioned, we were supplying some type of fasteners when we started business of fasteners with wind OEM. And as we entered them, we were successful in getting the opportunity for studs. And then we understood that same OEMs, they buy a lot of bolts and nuts. So we got into manufacturing of bolts and nuts. At the same time, once we develop any new product, for example, studs, nuts or bolts, we try to diversify the industry segment. For example, we started with wind as a segment for fasteners, but today we are developing the market in industrial application like off-highway equipment, tractor, mining equipment are our focus market. Railways, we are developing the market in India. So objective is to increase the wallet share with each customer by adding more and more products, and also identify the opportunities of developed products with other industry segments. And as a focus, we are continuously targeting to find new business opportunities or new customers in renewable mobility and industrial sector for any new product or getting new customers for developed products.
Oh, okay, sir. Understood. So
So
if you can add
about the electrolyzer and tractor.
Yeah, for example, recently we added new customers in electrolyzer segment where they use fasteners and our disc springs. And earlier we were supplying our products only for tractor industry, but now we started supplying our fasteners and Gala wedge lock washer for tractor implement application. So we just keep on adding the segments and products in different verticals.
Okay, sir. Got it completely. So are we witnessing any demand slowdown in the auto segment given the decline in the revenues from this segment currently?
Which segment you mentioned?
Automotive segment.
Automotive, as a absolute value, the business is growing, but I think because of much higher growth which is coming in industrial and renewable because of India and Europe, the percentage share of automotive or mobility is reducing in our business. But in general, we are seeing also growth in absolute numbers in automotive. But our products like fasteners or even the new products like wedge lock washers have more demand in renewable and industrial. That is why we are seeing much higher growth in those segments.
Oh, okay, sir. Okay, sir. Thank you.
Thank you.
Thank you. Participants who wish to ask a question may press star and one on the touchtone telephone. The next question is from the line of Jimit Mehta, an individual investor. Please go ahead.
Good evening, sir. Thanks for the opportunity once again. So, one of my questions was, what is the management outlook on the export to the US and the Europe? Are revenues from these regions are expected to remain stable, or is there a strategic focus on increasing revenues from these regions?
So I think broadly export contributes between 35 to 40% of our sales. And the reason is whatever normally new products we launch first in India, and we stabilize the supply chain, understand customer demand, and then also develop the global market for that. As far as the Europe and US is concerned, we broadly see that demand will remain in that level of 35 to 40% exports. And currently US is around 20% and US is around 14%. So, and quarter on quarter basis, there may be couple of base points plus minus, but overall I think export will remain around 35% to these two regions mainly.
Okay, so and like my second question would be, so what were the key drivers behind the increase in the margin during this quarter, and what would be the like guidance for on the margin side going forward?
Yeah, the key drivers being one is the contribution of exchange gain in the export revenue, and also the reduction in personnel cost. All of this, so this resulted in the RM cost ratio reducing by around 2%, personnel cost also reduced by 2%.
And going ahead, yes, we will be able to sustain the margin between 17 to 19%.
Okay. And my last question would be, what is the maximum revenue potential of the fastener segments and at steady state operations?
Yeah. Hi. So at Chennai, we are saying once we complete phase 2, we can be in a position to touch 110, 120 crore from that plant. And for fastener particularly, you asked, so for fastener, we have a facility at Vada. There we can touch the revenue of around 80 crore to 100 crore. So that's if fastener all put together, then 200, 220 crore, which we can touch.
And what would be the investment for that?
For Vada, we have already invested. We are not seeing any major investment, and because there is a space constraint in the present plant. But at Vada, Vada or some new location, we are planning to add 5 to 10 acre land in the coming month, and then we will be planning the capex. So that's still not final because we are still waiting for land to get finalized, and we have time. At Chennai, to complete the phase 2, we will be incurring approximately 9 or 10 crore approximately, which we already planned in our IPO.
Okay, sir. Okay. Thank you. Thank you for the opportunity.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Nishchay Desai from RR Investments. Please go ahead. So Nishchay, requesting you to kindly unmute your mic.
Yeah, I'm audible. Hello.
Yes, you're audible.
Right. So we have plenty of scope in our existing renewable segment. But any plans, even distant, of getting into the aerospace fastener space due to the sheer size of the opportunity which lies in front of us, like for India?
Yeah. So I think basically we are understanding the market's growth and opportunities in different segments and what products Gala can supply in these markets. So currently, as you mentioned, we are focusing on renewable, industrial and mobility. And at least in short term, definitely we want to have more opportunities from these segments and growth from the global market. But definitely we keep on looking at broader opportunities, and definitely aerospace is one of them, which is just under study, but we don't have any concrete plans as of now. But maybe in midterm, we will have some opportunities coming from these segments going forward.
Okay, sir. Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Riti Patel, an individual investor. Please go ahead.
Hello. Hi, sir. I just wanted to ask that what is the current order book position and what order inflow do you expect for the current quarter and also for the end of this year, like by the end of this year?
So normally we have orders coming in regularly, and apart from orders, we work with many OEMs and tier 1 companies who release 3 to 6 month forecast and firm demand for the current month. So considering this, normally we have order book of around 85 crores as of now, and normally we see this order book to keep on growing at the growth rate what we are projecting for next year, for example, 20 to 25%.
Okay, and also one more question I have. What is your hedging policy for Euro and USD export exposure?
Yeah, Giri?
I will answer that. We normally take 6 to 12 forward covers covering 50 to 70% of our export revenue. Considering uncertainty, we have now reduced the forward coverage to around 30 to 50% of the exports.
Okay, that answers my question. Thank you.
Thank you. The next question is from the line of Rohan Kapani, an individual investor. Please go ahead.
Hello, good afternoon.
Good afternoon.
So my question was on the line of the growth. So despite the strong sequential revenue growth in the Q3, so the PAT remained very flat. So was there anything underlying margin pressure excluding one-off items? Is there anything like that?
See, if you look at the side of the exceptional items, there is a one-time provision of 94 lakhs, which is on account of the new labor code, which has come in this quarter. Apart from that, there is also a reversal of 70 lakhs on account of, road tax, which is inadvertently claimed earlier. So cumulatively, it is the impact of 1.64 crores, which has impacted the profitability in this quarter as well as 9 months ended. That is the reason you see the profitability remain flat in this quarter.
Okay. So since you have, sir, exceeded the revenue target for the 9M, so would you like to increase the guidance for 2 year down the line or 5 year down the line, something like that?
I think current year we are expecting to grow by around 28%, but I think for next 2 years, 3 years down the line, we will still like to maintain 20-25% guidance and continue to focus to grow beyond these numbers internally.
Okay, sir. And inventory days has also increased earlier, so due to the, I think, Chennai ramp up. So have the inventory levels started normalizing in Q3 and going forward, what you will see in this line?
No, it is inventory there is a reducing trend, but it will take a couple of quarters for it to stabilize, not in the immediate future.
Okay.
Hello.
Thank you. So the participant left.
Okay. Yeah.
Participants who wish to ask a question may press star and 1. The next question is a follow-up question from Krupa, an individual investor. Please go ahead. Ms. Krupa, kindly unmute your mic.
Hello, am I audible now?
Yes.
Yes, ma'am.
Yes.
Yeah. I just wanted to lastly ask that what are those major key growth drivers for coming, short-term or medium-term perspective?
I think in general we are seeing the growth will be combination of multiple areas where we are working. So basically one area which we are aggressively working is to expand the market share and increase the wallet share with existing customers. So maybe we start with Spring and we see the opportunities for fasteners and wedge lock washers with them. Or we started with studs and now since we have expanded the portfolio with bolts and nuts, so we add the product category. And every year between 10 to 15% we add with the new business development, new customers, where we are adding globally more and more customers in Europe, US, or even in India, in basically 3 verticals, which is industrial, renewable, and mobility sector. So I think basically increasing the wallet share, adding new parts from the existing customer, and adding new customers are the 3 major areas where we constantly work and see the opportunities for this growth which we are targeting.
Got it, sir. And with renewable energy, how is your market share in wind turbine fasteners evolving, like particularly in the domestic markets?
I think today still the market share point of view will be not very substantial for Gala. But as we are continuously adding the customers and products, I think in over a period of next 2 to 3 years, we will reach to a good level of around 15 to 20% market share in India.
Got it. And last question, sir, from my side. What is the contribution of the Tier 1 company supply?
In renewable or in general?
In general, sir.
So at company level, normally we have OEMs, Tier 1 and channel partner, which is distributor. Normally OEM contribute about 40% to 50% depending on the quarter and the segment. And Tier 1 normally contribute between 25-30%. And about 10 to 15% is contributed by the distributor and channel partner.
Okay. Got it, sir. Thank you so much.
Thank you.
Thank you. Participants who wish to ask a question may press star and one. Ladies and gentlemen, as there are no further questions, I would like to hand the conference over to the management for the closing comments.
Thank you all the participants in this earning call. I hope we have been able to answer your questions satisfactorily. If you have any further question or would like to know more about the company, please reach out to our IR managers at Valorum Advisors. Thank you all of you.
Thank you. On behalf of Valorum Advisors, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.
Thank you.